Folks, I'm making a quick video to address some of the comments that were left on my last video regarding the sell-off in Constellation Software stock. The first comment was regarding share repurchases. So are share repurchases becoming a more attractive use of capital now with CSU trading where it is currently? I still think that buying companies in the private market represent a better use of capital for Constellation. So we know that Constellation generally makes returns on capital in the neighborhood of 25 to 30% when they're acquiring small software companies, say those with a top line revenue of less than 20 million. And when it comes to acquiring those that have a top line closer to 200 million, because those deals are usually brokered and there's a competitive bidding process, the returns are going to be slightly less attractive, right? But still, I would say in the high teens, low 20s, depending on how much debt they're using to fund the acquisition. And if we compare that to where Constellation shares are trading now, right? Constellation right now is trading at about 20 times last year's free cash flow available to shareholders. That's a free cash flow yield of about 5%. Okay, so I still think that dedicating capital to private VMS acquisitions is the way to go. And not just private at this point, but also in the public space. Just given how much software valuations have come down in public markets, there might be some interesting opportunities for Constellation. And now, they're able to see what Topicus did with Asseco, which was a public company, well, still is a public company listed on the Polish stock exchange. So I think that that's going to be a very interesting experiment for them, and I have no doubt it's gonna work out well for them, and that Constellation might use that as a bit of inspiration for doing a similar move as Topicus did. So that's it for share repurchases. Now, in terms of the sentiment shift, right? When can we expect sentiment to recover? When it comes to Constellation and when it comes to software valuations generally. And it's very hard to say. There's really no telling. Like we've seen in the markets, if you have bullish narratives, they can take valuations to the stratosphere and keep them there for a very long time. And the same thing happens with negative narratives. They can take valuations abnormally low and keep them low for a very long time. But let's look at some of the generational entry points we got in the past few years. Meta trading at less than 12 times free cash flow. What was it, 2.5 years ago? Just a screaming buy, and sentiment didn't take that long to turn around. A lot of that was because of Mark Zuckerberg's year of efficiency initiative, where he basically slashed a lot of bureaucracy. And then we had Alphabet, right? Alphabet, just a bunch of negative narratives. It's the next eBay. Sundar Pichai is not a wartime CEO, etc., etc. And now it's just left the S&P 500 in the dust, and it's re-rated very violently to the upside, which is great. And now we have Constellation. And, little side note, but since I've been doing this since 2009, the market has not given me attractive entry points like it's given me in the past 5 years. Like the Meta one was a screaming buy. The Alphabet one was a screaming buy. And I'm just not used to getting those, especially in rapid succession. And now we have Constellation. So, I always ask myself, is it something that I'm missing, or is the market just overly generous these past few years? But, if I go back to the fundamentals, To me, Constellation sits right alongside those other generational entry points. So not investment advice, obviously, right? But it's just how it's speaking to me right now. What else? Next point. Yes, somebody was asking about, how do I feel about AI native software competitors emerging and being the preferred, let's say, supplier for Constellation's potential customers. Let's just take a little step back here. Constellation typically buys mature software companies, right? Typically, it's going to be software companies in a niche industry where the addressable market for a software provider has already been mostly captured by the two or three incumbents in that sector, right? So they're not acquiring new customers. So for me, it's a non-issue really. And then when it comes to AI native software companies potentially poaching some of Constellation's existing customers, that I think is highly uncertain, because Constellation's customers, their number one priority is no business interruption, right? So if someone comes out with a software solution that can do the same thing at a fraction of the cost, and it's now got all this shiny AI stuff, I don't think that's going to be enough to make a customer incur those switching costs, right? At the end of the day, the customer just wants no business interruption. Okay, so that is very low on my list of concerns. Next, someone said that they would be very surprised to see special dividends. I totally agree with them. And the thing with special dividends, share repurchases, acquisitions of VMS companies, right? What's nice is that Constellation is communicating to its shareholder base via its capital allocation decisions. Don't look at what they're saying, look at what they're doing. So that was the point there when it comes to special dividends. So that's all I had for today. Take care. Good luck. Bye-bye.